Hello everyone. Weather is turning colder, but the IPO market it's on fire. Which IPO will make the next wave of winners? The hope is running high. Investor who got alerted in Sudeep Pharma walked away with solid profits. That success has everyone asking, what's next? Which IPO can replicate the momentum? Today we have three contenders: Meesho, Aequs, and Vidya Wires. Three IPOs, three stories fighting for investor attentions. Tonight we will uncover in this blog the strength and the weaknesses, which IPO deserves your confidence, which deserves caution, where does your smart money go in. So buckle up, get your coffee or tea, the comparison begins right now. So let's start off with the basic details. Meesho, it's an e-commerce. Everyone should be aware of this company. Price band 105 to 111. Issue size around 5,421 crore. Fresh is around 4,250 crore, and offer for sale is 117.2. And retail portion is only 10%, and the QAB portion is 75% in this IPO. Subscription dates December 3rd to 5th. Allotment is on 8th, and listing is on 10th. Next one, Aequs. It's an aerospace and precision manufacturing company. 118 to 124 price band. Total issue is 921. Comparatively smaller compared to Meesho. Fresh issue is 670. Offer for sale is 251. Again, retail portion is just 10%, and the QIP is 75%. Same dates. The third one is the Vidya Wires, specialized electrical and conductor products. 48 to 52 rupees on the price band. 3,000 rupees, 300 crore total issues, and the fresh issues of 274 crore, and offers for sale of 26 crore. Here the retail is 35% and QIB is 50%. So these are the three IPOs which are clashing on the same date. Let's get started. First, let's look at the revenue aspects of Meesho. If we look at the income from FY 23, 24, 25, it's increasing from 5,800 approximate crores to almost 9,900 crores. What we can say is the revenue is increasing, the income is increasing for Meesho. But what is happening? The profit after tax is getting reduced. In 23, FY 23, it was 1671. 24, they did make a turnaround. They were able to make like still losses, but it was like 327.64 crore. But again, in FY 24, 3941, the losses are huge. Again, there is some component to it saying that it is one-time fee which is related to restructuring and some of the ESOPs given to the employees. Still, if you look at the current FY 26 also, still they are at loss. They don't have any borrowings. They have made continually losses for the last 3 years. That's the reason they have retailed 10%. It's a loss-making company for now. Let's look at Aequs. Again, income was 840, 988, 959. Again, there is a reduction in the income for FY 25. But again, profit after tax is again negative for all the 3 years: 109, 14, and 102. Again, FY 24 they had less losses. Again, FY 25 they have more losses. And in the current Q1 also they have 16.98 crore losses, and they have a borrowing of 533.51 crore as of FY 26. So this is also a loss-making company. In the last 3 quarters they have made losses. Next, let's look at Vidya Wires. They had total income of around 1000 crores, increasing to 1188, again 11491. You can see a gradual increase in the income for the past 23 to 25. If we look at profit after tax, also it is like increasing 21, 25, and 40. They have shown a steady income of increases in the profit, and they have a debt of 162.75 crore. If we compare all the three, two are loss-making companies and one is making purely profit. That is the high-level analysis of the financials. Let's look what does Meesho do. What is the business model? It's asset light. They don't have any warehouses. It's a work on zero commission model. They basically work on unbranded sellers in tier 2 cities. Their basically revenue comes from advertisement and logical services. They don't have any commissions. Like if you look at the strength, it is a brand name. Many people order from this website. It is very unique, cost efficient, and it has a wide bill, maybe 14-15 crore of active number of users. So that is one of the strength. It's a household name. A lot of people use this application. It works on the lower cost products. So that's the strength. Next, what is the risk of this IPO? Again, as I said, lower customer loyalty in the low margin segment. If since it does not include full-fledged products. Sometimes if any other competitor website gives some benefits or some cashbacks, people tend to move to those website, and definitely they cannot at now cannot compete with Amazons and Flipkart, which are most broadly diversified. And as I said, profit remains a key watch point with continued net losses. And also the logistics, whatever they do, they are depending on the third party. But as one of the recent interview, they said they wanted to get into the logistics things also, which is also a good thing. But if you look at high level, brand name is the biggest strength, and risks are losses. If you look at the second company, they work on forging and assembly and things like that within the SZ, critical components to major like OEM clients like Airbus and Boeing. Like Airbus and Boeing are the largest aircraft manufacturers. If these companies are working with that, it's a very good thing. And also it has India's largest aerospace product portfolios. It is fully integrated, it has advanced capabilities, it has 15 years relationship with like Airbus, Boeing, Collins Aerospace. These are very big US companies and European companies. If this company has these tie-ups and a working relationship for more than 15 years, it builds confidence in the industry. As I said, any negative for risk, any negative thing should will cause losses. History of consequent losses, as we see negative cash flow, and also exposure to foreign exchange fluctuations is also one more problem. And one more thing is, especially this aircrafts, if there's any negative news in one aircraft also, they tend to cascade. And also the revenue, top 10 customers account for 82% of the revenue. That is also one of the major concern. And these things require advanced machines, so they need upfront capital to set up any new thing. If something new comes up also, they need upfront capital to bring these new machines, do this forging mechanism, welding or whatever for aerospace components. Other what I can say is business model is good. Slowly they want to get into consumer markets like pan, skins, defense also. But these are the high level like business model, strengths and risks for Aequs. Vidya Wires, they basically work on precision engineering wires, copper strips, PV ribbons, aluminum based copper strips, basically related to copper and aluminum. It's a very old company. Strengths includes a track record of profitability. The valuation is pretty decent here compared to peers. Again, they have a like large customer base, and it is located in Gujarat. If you see at risk, top 5 suppliers account for the 90% of the raw material. That is one thing. Second thing is, if the copper prices vary in the market, global market, their products also, because they are heavily dependent on that, their products also might get affected. And there are some cases like two promoters are working in some other company which also works in a similar segment, which could be a conflict of interest in the future. And also there were some SEBI notices in the past. Everything is closed, but just wanted to let you know that there are some cases and some issues with the promoters which had happened in the past, but one of them is resolved, one of them might be in future. Like one other major thing to look at is located at Gujarat, with Commonwealth Games coming up in 2030. We are assuming that companies in Gujarat, due to the requirement for all those things, might get good growth. Okay, if you look at what is the objective of the fresh issue, Meesho wants to invest in cloud, okay, and invest in one of the subsidiaries, and also towards AI and development. Aequs, as I said, they have some loans, so they want to repay the loan so that they increase their like they'll move towards a positive side on the balance sheet and invest in 3 subsidiaries. Again, Vidya Wires also have some loans. They want to clear off those loans and fund the capital expenditure. As I said, they might need some upfront machines. If you look at the register, it's linking time for Meesho and Vidya Wires, Aequs for KFIN for Aequs. And if you look at the number of applications, Meesho has the highest number of applications reserved. If you look at Aequs and Vidya Wires, you can see though Vidya is a smaller IPO, the retail has more number of reserved applications. This is because there is only 10% retail quota in Aequs and Meesho, but 35% retail quota in Vidya Wires. Point to note. If you look at the GMP as of now, 29th November around 4 p.m., it suggests that one retail lot allotment would make around 5,000 profit in Meesho and Aequs, and Vidya Wires around 2,500 profit. So if you look at the early predictions, what we want to infer from this, whatever we have learned, right? If you look at only the allotment, I have just one allotment, I've done my analysis. Obviously, Meesho is a bigger IPO, so if you want to apply for Meesho, so that would get first priority, second would Aequs because size, and third would be Vidya Wires. Again, if you have to look at retail, just look at the subscription, 2 and 3 might get interchange also. Safe investors, like I'm very safe investors. Like if you go to any school or any college, first thing they would teach you is don't invest in loss making companies. Invest when it becomes profitable, not on the assumption that it might become profitable if you are a safe investor. So avoid Meesho and Aequs because why? Loss making and the valuations are pretty high compared to its peers. Apply Vidya Wires, why? It's making good profit, coming in good valuation. With Commonwealth Games in 2030, there is scope of improvement and lot of opportunities also there. If you are safe investors, you can apply Vidya Wires and track it for long time. Okay. Again, if going with the trend, see Lenskart, Physics Wala are all like new age companies like Meesho, though they did not have profit like Pine Labs also, but the market did value them. Okay. So if you're ready to take risk and thinking in the similar lines, if QIB supports, I would say is based on recently how things have happened with the future is e-commerce industry and with India's digital economy growth, you can always apply to Meesho and also to Aequs also because that is coming from a aerospace and defense sector and it has strong operational advantages. They are trying to diversify into other products also. That is also a good thing as usual with Javers since it's a established industry in a profitable sector. That is also good. That is if QIB supports and you think like how Lenskart, Physics Wala, Pine Labs and those things have worked, if you're going with the trend, that would be the thing. Listing gain, which would be better? I have only one option to apply one of them, which would be better as of now it's too early to decide, I would say, but looks like Meesho because of the uh, brand name. And also one other point to note is the OFS part was even huge is what I'm hearing, but the investors did not want to cash out, so they reduced the OFS part by almost 30 to 40%. That is also a plus point. They didn't want to cash out everything. Too early to decide. This GMP trend to fluctuate between anywhere like one day it can be 50% to one next day it can be 2% also. Too early to decide, but as of now for listing gains it looks like Meesho. Though Vidya Wires is a profitable company, they are like better companies like you have Bansal Wires, otherwise which are making even more profit. So for long term, nothing great in all the three companies. You can always find some competitor in the active market which are making much more profit, or invest in a company which is making profit or just earn profit. This has to pros. They have already a lot of proven companies in the markets. Out of three, if you have to pick one, just based on the revenue, you can pick Vidya Wires. Okay. So the anchor book is not out. The subscription has not started. So will I post another update? Yes, once the anchor book is out, maybe after day one subscription, I'll post an update on comments or I'll create a short video or a shorts. So please subscribe to the channel because that will give you the final verdict. This should be the early verdict, early predictions. What I can say without the anchor book, without the GMP trend for a few days, it is very difficult to say which is the best IPO of the three, which is the safest IPO of three, which will be the best for IPO listing gains. And also, if you want, if you comment, I can also share my strategy, what I would be doing. Most probably, I would be deciding on the last day. Ignore the typo, but on the last day, post around 2 to 30 p.m. I can post my strategy also. So think through. If you need an update, maybe once the anchor book is out, let me know. Please come. I'll comment on the comment sections. So what do you think about this? Please like, share, and comment. Thank you.